Hello everyone. In this video, we will be covering our final accounts, okay? That is financial statements. I am telling you to before starting this video series, please complete the fundamentals, journal and ledger. All the series are already been posted because without learning the basic fundamentals, without learning those journals and ledgers, we will not be able to solve this final accounts, okay? The questions need the knowledge of all the journals and ledgers, okay? Now, I will be asking few very simple questions and we have to just answer it so that we can develop a theory that how final accounts are being prepared, okay. Now, if I tell you that tell me the journal entry for salaries paid rupees 500. What will you say? You will say, sir, very simple, salaries are expense and salary account debit to cash. Very good. 500. 500. Simple enough. If I tell you that you have purchased goods, what will you write? You have purchased goods for cash, say 200 rupees. What will you write? You will write, sir, we have purchased goods. So we can write purchase account debit to cash account 200 and 200 rupees. Okay. When we have purchased goods for 200 rupees, if I tell you while purchasing these goods, you have also paid some transportation charges. Let's that transportation charges be 50 rupees and you have paid 50 rupees for that also. What will be the journal entry you will write? You will say, sir, very simple. Transportation is our expense. So transportation expenses account debit to cash 50 rupees, 50 rupees. Simple enough. If I tell you that you have sold the entire goods at, let's say, 310 rupees. Okay, you have made the sale. What will you write? Sale of goods has been in cash only. Okay, everything is in cash. So the journal entry will be cash account debit to sales 310, 310. If I ask you, whatever goods you purchased here, you have sold all the goods, okay. How much profit you have made from that goods only? You have purchased the goods, you have sold the goods. Can you tell me what is the profit amount? Now, be with me, focus. You can have two answers here. See, the first one is, some student might say, sir, we purchased goods for 200. We sold entire goods for 310. So 310 minus cost of 200, we are making profit of 110. If I ask you, you have made the profit of 110, but when you purchased the goods, it was at the seller's place. If we are bringing that goods to our office, you have to pay the transportation expenses. These are the compulsory payments you have to make to bring inventory or to bring the stock at your location, at your factory or at your office. Very simple. So this transportation charges, don't you think it should also be added in my cost of 200 rupees? Because if you would not have paid transportation money itself, how will you bring it to the office and how will you sell it? Understood? So I can say this transportation expense was directly related with the purchase of goods. Simple. It means, sir, you want to say whatever expenses are directly related with the goods should be added with the goods cost only. Very good. That is absolutely correct. So I can say it will not be 200 rupees, but it will be 250 because the goods cost was 200, transportation is 50. So 310 minus 250, my profit is 60 rupees and that profit is called as gross profit. Gross profit means the profit you have earned from trading of goods. From trading of goods is like, we already know the meaning of trading. I have already discussed in the fundamentals. I am just telling you again, trading of goods means buying and selling the goods. So we bought the goods and now we are selling the goods. So the profit from that was 60 rupees. That is your gross profit. Understand this. This was a very simple scenario, okay. We purchased goods in 200 rupees and we sold the entire goods. If I tell you, say, we have purchased goods on say 1st April purchased goods for 200, then on again 1st June purchased for 800, then on 30th September purchased for 450, then 31st December we purchased for 600, then 2nd Feb we purchased for 550, then 30th March we purchased for 720. These are the purchases of the entire year. And if I tell you on the same dates we sold not the entire goods, or say sales were made on say 30th June, goods sold for 350, then on 30th September sale was of 700 or say 600, then again on 31st 12 we sold the goods for 100, then on 1st January we sold the goods for 200. Understood? And we still have some goods in our warehouse also. We have not sold the entire thing. We have not sold our entire stock. Now if I tell you find the gross profit, how will you find it out? You will say, sir, obviously from the sale you can remove the cost, but the problem is we have not sold the entire goods. Okay, we have sold some part of the goods in the sales of the current year. How to find it? See, the problem now is that to find the gross profit and how the problem will be solved. How the problem will be solved, the thing what we are going to prepare is, that is your trading account. How will it help us? Check. If I tell you that in trading account, let's say the entire purchases, if I am writing, see, I will tell you how the journal entries are formed, just be with me. Or before trading account, if I tell you, just apply the simple logic. Okay, what is the total purchases here? 800, 200, 1000, 2000, 2000 and then 3200, 3320. The total purchases are 3320. The total sale is 6, 7, 8, 9, 10, 11, 12, 1250. And I still have the closing stock of say 2500. Now can anybody tell me what is the gross profit now? See, if I tell you that I have purchased goods worth 3320 rupees, okay, and at the end of the year I still have stock worth 2500. It means during the entire year how much cost of goods we have already sold to the customer. What is the cost of goods we have sold? So you will say, sir, very easy, you purchased for 3320. We still have in our office, in our godown, how much? 2500. It means 820 rupees cost of goods has been sold to customer. Correct? We have sold 820 rupees cost of goods to the customer. Now tell me one thing, am I doing charity here or business? You will say, sir, obviously business. Will I sell 820 rupees cost of goods at 820 rupees only? No. At what price am I selling the goods? See, 820 rupees goods, I am selling the goods at 1250. Now can you tell me the gross profit? You will say, sir, very easy. Gross profit can be calculated sales minus cost of goods sold. So COGS, my sale was 1250, cost was 820, it will be 430 rupees. Very easy, simple enough. Now after learning this all information, okay, now this information is very tiny. If we see from the point of view of some business or company, there will be hundreds of entries like this of purchase and sales. Understood? To write all these entries in accounting, how are we going to write that? How we are going to calculate gross profit? That is what our final accounts is telling us. Okay, now to continue with it, we will continue first with our journal entries. See, there will be every day so many entries for purchase, sales and all those things. If I tell you now, you have to pass every day so many purchase entries. Okay, if I tell you for the entire year, total purchases account debit to cash was say 10 lakh rupees. Okay, and sale was cash account debit to sales was say 15 lakhs. Simple enough. The journal entries are happening every day. Okay, I'm just writing the total of that. Now tell me about these journal entries which are happening every day. You will not sit and calculate this, the profit, gross profit is how much, this much and all. You cannot do that every day. Okay, what we are doing it, we will transfer all the accounts of purchase, sales, not the cash, purchase, sales in a particular account. Which account? That will provide us the gross profit directly. That account name is your trading account. Why? Trading account will record all the transactions related to buying and selling of goods, because the name itself is trading. Trading means buying and selling of goods. So all the activities, all the transactions, everything related to buying and selling of goods will be recorded in the trading account itself. Understood? Now tell me, when I am saying purchase account debit to cash, this is the purchase happening. If I have to transfer purchase in the trading account, what will be the journal entry I will write? If sir, you have to transfer purchase account in trading, you can write here trading account debit to purchases, because I am transferring. Purchase was debited, now credited into trading. If I have to transfer the sales into trading, what will I write? You will say, sir, very simple, buy sales account debit to trading account. Remember, why are we transferring all the accounts into trading account? To calculate the gross profit. Understood? Sir, you said one more thing. Which thing? Sir, you said transportation charges were also incurred. No. So will we transfer that also? Absolutely correct. So I will write here transferring transportation charges, you will write as trading account debit to transportation charges. Sir, is there any other name for transportation charges also? Absolutely. The name is carriage inwards. Carriage inwards means the carriage we have, the goods we have, if they are coming inside our factory because we are buying. So that's why the name is carriage inwards. Okay. Carriage inwards. Whatever expense is there, that also transfer to trading. It means, sir, if you are purchasing goods, if you are incurring any expense related to goods which are directly related to the purchase, should be transferred to trading account. Very good. So if I tell you, when I am transferring or transporting charges are incurred, okay, suppose the truck full of raw material or the goods come into the factory or our office. Obviously I will not take out that all the goods. Obviously some workers will be taking out, so I have to pay wages to them also. So wages will also be transferred to the trading account. Please remember one thing. We are doing the transfer entry in the final accounts. The main entry when the transaction happened, we have already passed. Wages to cash has already been passed. Now we are transferring. So trading account debit to wages. Understood? By this entry, all the expense account will automatically get closed. Understood? From where will we get all these things? From the trial balance. Without trial balance, final accounts is not possible. That we already know. So the format is, first you will write the journal entry into the journal book, then you will post it into the ledger, then we prepare the trial balance. After trial balance, we prepare the final accounts. Simple. Then to wages. So you can say that purchases are transferred, sales is transferred, expenses are transferred to trading account. Understand this. By transfer entry, one more misunderstanding of the students was that all the expenses are always debited. Remember this. Expenses are debited only when they are incurred, okay, when we are paying the expenses. But in the transfer entry, expenses are credited. Understood? This is the first time when we learn that expenses are credited also. Okay, why? Because in our 11th, in our 12th, in our first year, in our first PUC, we always learn expenses are debited only. No, it is not the full truth. Okay, expenses are debited when incurred, but expenses are credited when we are transferring it to trading account. The problem is, in our schooling we learn directly trading account. Okay, we do not learn the journal entries of the trading account. When we learn the journal entries, we understand, okay, expenses are credited also, because to transfer you have to reverse it, and to reverse this we are crediting the expenses. Understood? Now after this, you can say, while preparing trading account, why we are preparing again gross profit. If I prepare trading account now, trading account tell me what was the first entry? Trading account debit, 2 purchases. So trading account debit, 2 purchases. Then buy sales, buy sales. Simple. Then carriage inwards, or you can say wages incurred, wages. Now understand, purchase, carriage inward, wages and sales are transferred. Now suppose we are in the third year of business. Okay, if we are in the third year of business, obviously we will be having some closing stock in the second year, and from that closing stock, if we are selling goods into the current year, we have to record that also. But check in our trading account, where is our opening stock? Because the closing stock of second year will become opening stock for our current year. So we have to write our opening stock also in the trading account. Why? Because that stock we would have purchased in some year and we might sell it into the current year. So therefore we will transfer our opening stock in our trading account. So to transfer that, you will write trading account debit to opening stock, to bring it from last year's closing stock in the current year's opening stock. Now, after incurring all these charges, selling the goods, everything, obviously we will be having some closing stock in our godown, in our factory. So that we will write here by closing stock. Understood? Now, from this entire process, we will be having some profit. Therefore, you can write trading account debit to gross profit. Sir, is it also possible that we might have a loss? Obviously. So you can write here by gross loss. Understand this. You can also see if goods are coming inside or we are purchasing or getting the goods, it will appear in the debit side. All purchases of goods or goods are coming inside. You will be writing here all the expenses incurred to bring the goods. That also we will write here, like direct expenses are carriage inwards and wages. If goods are going out, see, from sales goods are going out only. From closing stock, why buy closing stock? So that our closing stock will become the opening stock of the next year. It will help us to prepare trading account in the next year. So that closing stock, that's why we are writing here only. Now, few very important things. Sir, is it possible whenever we are selling goods, we might get some return also? Absolutely, it is possible. So where will we write that? See, it is very simple. When you are writing the sales amount, okay, if there are some sales return by our customer, just remove this from sales. Sales return will be reduced. Understood? And the net amount of sale you can write here. Understood? Then again a student tells, sir, what if we have purchased goods and we want to return it? Can we return it? Obviously we can return it. So to purchases you can write it less purchase returns. Understood? Now, one more student tells, sir, we were in the business of shirts, no? Yes, we are in the business of shirts. We are trading in the shirts. Absolutely correct. Sir, what if I like few of the shirts in my office, in my factory, and I take that for my personal purpose? Now what will we do? Again, if you are taking that out, okay, that for personal purpose, it means whatever you have purchased, suppose you purchased 10,000 rupees shirts to resell it, but now you are taking out. So you will remove it from here, less, you can say drawings, or you can write here that you have withdrawn for personal purpose. You will just remove out of 10,000 rupees. Suppose you have taken out 500 rupees shirt. So you will remove it from here. Sir, can we write it here also? Sir, we are not writing it here. But see, the accounting result of gross profit will come same. But we are following the standard method and we will remove it from the purchases itself. That whatever amount 10,000 I have purchased from, I am taking 500 rupees shirts for my personal purpose. So we will write it here, less purchase return, less drawings here itself. Understood? This is what trading account is telling us. Now, as soon as I write this now, a student tells me, sir, you said that we are transporting goods from our buyer's place to our place, okay, from whomever we are purchasing. Correct? Sir, suppose in the transportation itself, there is some theft happened and our shirts we have lost due to theft. Then what will we do? See, if we have lost it from the theft, it will affect my trading account. My gross profit will reduce. Why? Because it will be not in the normal nature of the business. It is obviously in the abnormal nature. Understood? Now, what is happening here? See, you can say, see, there can be two things. For loss, loss can be either normal or abnormal. Say how? If suppose we are bringing shirts to our house or our office, correct? Say in the route 1 or say 2 or say 3 shirts, some mouse was there in the truck or something was there, and few of the shirts stitching they took out or they were torn by the mouse and all. So that we can say that is a normal loss. Okay. Say we are in the business of oil, and if we are importing oil and there is some loss, suppose we are importing 1 lakh liters of oil. Okay, and due to the summer season we have lost out of 1 lakh liters say 10 or 20 liters, because we imported it from Saudi Arabia or America, and because it was coming in the summer season, few of the fuel has been lost. Okay, summer season obviously you can say it evaporated or something happened. So what do they say? It is very normal in this nature. Okay, it is in the normal course of business, this is the normal loss. But if suppose out of 1 lakh liter 1000 liter is lost, now that is the problem. That is what we are calling as abnormal loss. Now how will we write abnormal loss? Check. Abnormal loss will be written as, because it is the loss, so abnormal loss. See, all the expenses first are debited, so abnormal loss account debit. What have we lost? We have lost the goods only. So we do not prepare, if you have ever focused in your entire 11th and 12th standard, we never prepare inventory account, we never prepare stock account. We are also preparing trading account, but if you can understand, trading account is nothing but stock account only. It is nothing but our inventory account only. Okay, because see, in inventory account what will be going to write? We will write the opening balance. Opening stock is opening balance. Closing stock is nothing but the closing balance. If you are purchasing, you are writing it here. So it is nothing but the goods account only. The name we are giving trading here because it is our normal course of business. Our business itself is buying and selling. So we are giving it the name trading. Now if I tell you, I have lost my goods, I have lost the inventory. So my inventory will increase or decrease? Inventory is asset. I have lost inventory, so it should be credited. So I will write here abnormal loss account debit to inventory. But remember this, we do not prepare inventory account. What do we prepare? We prepare trading account. So I cannot write the name inventory. I will write here abnormal loss account debit to trading account. Understood? Easy. Now abnormal loss account debit to trading account. Now see, I have lost the goods, so I have written abnormal loss to trading. But understand one thing, don't you think it is my loss because I have to pay the money to my seller, whoever, from whomever I have purchased the goods? Obviously. So this is the loss, or you can say this I will also write in my profit and loss account also. This loss will be transferred in my profit and loss account also. That we will learn after trading account obviously. Profit and loss account debit to abnormal loss. We will learn this in detail when we will be covering profit and loss account. Okay. Just to complete the topic of abnormal loss, I am telling you both these entries. Profit and loss account debit to abnormal loss account. Understand this. Trading account was not there till 1970. Okay. 1970, 1971 around that time you can say the inventory account we used to prepare. Check. If I just give you a little background of this, understand the birth of trading account. Okay, let's see. First we used to prepare inventory account. See, whenever I am saying inventory stock, I am just using it, they both are same only. Okay, inventory account, the technical word is inventory only. Understand this also, the word stock is not correct. Okay, because stock means a group of something. So when I say stock of goods is called as inventory. Okay, in stock doesn't mean inventory. Inventory, when we say inventory, is the technical term, so always use the word inventory. Okay, but in our schooling in 11th standard we have been using stock. It's okay. Inventory account, if I tell you inventory is my goods, now tell me if I am buying inventory, there will be obviously opening balance. So inventory is my asset, so opening balance will obviously on the debit side, so to balance BD, and here we will write by balance CD. Simple. Let's say I had an opening balance of 1000 rupees. Okay, now if I tell you I have purchased inventory of say 500 rupees. What will I write? Inventory account debit to cash 500. Simple. I have closing balance of say 900 rupees. So I have written here closing balance. If I tell you I have sold goods worth by cash, I have received and I have sold goods of say 1000 rupees. Now the problem which was coming in inventory account, and to cover that problem we had to prepare trading account. What was the problem? See, I am telling you the background, okay, the birth of trading account. Please focus. In inventory account the problem was opening balance we used to write at cost. At what cost I have purchased inventory. To cash, when I am writing here, this is nothing but the purchase of inventory. This is also at cost price. At cost. Balance carried down which is in my godown, that is also at cost price. But the sale which is happening, this is at our selling price. Now the problem was when I am preparing inventory account, this is at cost price, this is cost price, this is cost price, this is selling price, and that's why it became difficult to tally the inventory account, and that's why we stopped preparing the inventory account itself. Understood? So we stopped preparing inventory and we started preparing trading account. That's why in our any journal entry we never write inventory account debit to cash. What do we write? Purchase to cash. When we sell it, cash to sales. Understood? Now coming back to our topic, this is our trading account. Now we will go back to our PDF and see the format here. Check. Be with me. Final accounts are prepared after the preparation of trial balance. Correct. First statement includes income statement and balance sheet. What is the income statement? Trading account and profit and loss account. See, in our schooling, trading account and profit and loss we used to prepare separately, but many companies prefer it preparing in one particular transaction, or you can say in one particular ledger itself. We will see that also, don't worry. Trading account and profit and loss account, then balance sheet. What is trading account? Buying and selling of goods. It is prepared to ascertain gross profit or gross loss. It shows the effect of buying and selling of goods and services. It records all the expenses which are directly related to the normal course of business. Understood? Now, after this I have given the format of trading account. Please check. Opening stock is there. Two purchases, less purchase return or return outwards. Purchase return itself is called as return outwards. Goods given as charity, samples or used by proprietor, that also you will remove and then write the final amount here. To wages and salaries, carriage inwards, freight and carriage inwards, these all are transportation only. To factory, power, fuel, electricity, rent. See, if we are in the manufacturing business, we are producing our own shirts, so we will be paying for the factory machines, for power used, for fuel used, for electricity used, for the rent. Remember this. For any expense of factory, if you are paying any expense for the factory, it will always appear in the trading account. But why, sir? Everything for factory is in trading account. Why? Because all the expenses in the factory are undertaken for producing shirts, and shirts is our normal course of business. It is directly related to manufacturing of shirts. So any expense related to factory is a direct expense. Understood? Then sales, less sales return, and you can write net sales here. Then sale of scrap. Sale of scrap is if suppose there are few unsold stock in our godown, or say you can also say some shirts we are not able to sell, they are getting very old, or you say some machinery has been very old and it is just, you cannot say machinery, but if there is some machinery also very old machinery, if it is almost scrap, residual value if you are selling, that you can also write in trading. Buy closing stock, abnormal loss, and whatever is the balancing figure that will appearing in the gross loss or gross profit. Understood? After this, see, we have just written the definitions what we have already covered. Check. Opening stock is the closing stock of previous year, it will be given. Purchase means goods purchased in the current year for the resale. Purchase return means we have returned the goods due to some reason such as wrong quality, product defects, etc. Few important terms that will cover just after CDE. Wages are the labor charges paid to the workers in the factory. Salaries are included in profit and loss statement. But sir, you have written in trading account salaries. Please understand, if wages and salaries is written in the question, debit it in the trading account, because they are saying wages first. Wages first, if they are saying, it means what? Wages and salaries are given to the workers of factory only. It means that if only salaries is appearing, then profit and loss account. Then freight and carriage inward is the transportation cost. We have already covered this. Now what we have to learn, the few important terms that are, what is adjusted purchase? Opening stock plus purchases minus closing stock. That is your adjusted purchases. Okay. Suppose you have opening stock of 500. You purchased in the current year of 1000 and you have the closing stock of 200. Then your adjusted purchase is 1300. But sir, why are we learning this adjusted purchase? Understand, in our trading account, we are writing opening stock also, we are writing purchase also, we are writing closing stock also. But if suppose in the question, they directly give us adjusted purchase, then we will not write opening, we will not write purchase, we will not write closing. We will directly write adjusted purchase in the trading account. Understood? That is the purpose of these important terms. After this, next is stores consumed during the, see, in factory we will obviously use scissors, tapes and plastic wrappers and all those boxes and all, that is stores. Again the same thing, opening plus purchase minus closing. Cost of goods sold, what is the cost of the goods we are selling? That we have already learned in the example. Again same, opening stock plus purchase minus closing stock of inventory. So you can say almost that adjusted purchases and cost of goods sold are same only. Okay. After this, see, in cost of goods sold, we also add, because it is not exactly adjusted purchase, what happens in cost of goods sold, we also add the direct expenses. If direct expenses given in the question, see, we have only two direct expenses, that are wages and carriage inwards. Remember this, okay. So adjusted purchases is a part of cost of goods sold and it is not exactly cost of goods sold. Okay. Net sales is sales minus sales return. Gross profit is sales minus cost of goods sold. Now, after this, we have all the factory expenses. Remember, all the factory expenses are direct expense. Hence, in trading account, closing stock is the unsold goods at the end of the year. Obviously, whatever goods we are not able to sell, that is our closing stock. Abnormal loss of the goods means that a significant amount of inventory has been burnt or lost due to some unexpected reason. So if there is unexpected reason, abnormal loss, right in the credit side of the trading account. The format is already given. Please download the PDF and listen this video, or else it will be of no use. Now we will be solving some capsules. See, the format and all, everything is given. I will again recommend, please take the printout and solve these capsules with me. Okay. Now, check. Question number 1 we have, prepare trading account with the information given below for the year ending on 31st March 2023. See, stock as on 1st April 2022, it means it is the opening stock. Our year is 31st March 2023, it means the year is 2022 to 2023. Okay. Year will be ending on 31st March 2023. We have stock on 1st April 2022. So where will the opening stock come? Tell me. We will write here 2 opening stock. How much? 1 lakh. Simple. Then wages 50,000. 2 wages 50,000. Then sales 15,50,000 by sales 15,50,000. Sir, why have you written sales in inside? Because we don't know, there might be return inwards or there might be sales return. Understood? Then return outwards, return inwards. See, or what you can do is you can use that, you can read all the points first and then you can write it. Okay, that wages in trading debit side, sales in credit side. Return outwards is purchase return. Return inwards is sales return. Freight inward, carriage inward and purchases. So now this we have written, wages we have written, sales we have written, purchases are how much? 10 lakhs. 2 purchases 10 lakhs. Then carriage inwards 10,000. 2 carriage inwards 10,000. Then freight inwards 5,000 to freight inwards 5,000. After that we have return inwards, that is sales return less sales return. How much? 50,000. So you can write here final amount is 15 lakhs. That is your net sales. Purchases return outward is 80,000. So less purchase return, or you can say less return outwards. 10 lakh minus 80,000, 9 lakh 20,000. Very easy. Now, closing stock on 31st March 2023 was valued at rupees 20 lakhs. So we will write it by closing stock 2 lakhs. You can pause the video and find out whether it will give us gross profit or gross loss. Check. Do first total of both the sides. 15 plus 2, this is your 17 lakhs. This total is 1 lakh plus 50,000, 1 lakh 50, 9 lakh here, 1050, 1070, 1080, 1085. So this is your 10 lakh 85,000, and here it is 17 lakh. So obviously we will get here balancing figure as gross profit. Gross profit is our balancing figure. 17 lakh minus 10 lakh, 7 lakh again 85,000, 6 lakh 15,000. Understood? And the total on both the side we will write 17 lakh and 17 lakh. Understood? Very easy. Trading account is very easy. Okay. Now after this, capsule number 2. Prepare trading accounts with the information given below for the year ending on 31st March 2023. Okay. Remember few important things, okay, to improve your presentation in the answer. What you can do, when we are preparing trading account, you can write a trading account for the year ended on 31st March 23. Okay. And if the name is given, say Arts Limited or anything, so you can write here that also. Okay. For the year ended on 31st March 23 for Arts Limited. Okay. Now, what is the information given? First information is opening stock. In opening stock, they have given raw material and finished goods. So, when it is raw material and finished goods, you can think that it might be talking about manufacturing unit. Okay. 40,000 and 70,000. So, you can write here 2 opening stock, raw material and finished goods. How much is it? 40 and 70. 40,000, 70,000. Total is 1,10,000. Simple. Then purchases is 1,80,000. See, purchase is 1,80,000. Purchase return is 5,000. Sales 3,50,000. Sales return is 3,000. Okay. Then you can write as 2 purchases 1,80,000 less returns how much? 5,000. So it will be 1,75,000. Then we will write here by sales. Sales how much? 3,50,000 less sales return how much? 3,000. See, it is already written, okay, this is returns 3,000, so you can write here 3,47,000. Simple. After that we have wages and factory expenses 6545. Wages 65, factory expense 45. Then what is left? Freight inwards and freight outwards. Okay. So we know freight inwards will go in trading account and freight outwards will also go in. No, don't do this mistake. Okay. Freight outwards will not go in trading account. Whenever we are talking about trading, only freight inwards, only carriage inwards, because This is the cost incurred to bring goods inside our factory or at our location. Okay. Outwards, what is freight outwards? Suppose I have sold goods. Okay. When I am selling goods, the transportation charges from my office, from my location to my customer's location, that is freight outwards. That expense you will not write in the trading account. That comes under profit and loss account. Understood? So you can say for this question, this information of freight outwards is your biscuit. Okay. Ignore the biscuits always. Now after this, freight inwards is 10,000. So you will write here 2 freight inwards 10,000. After that, check if we have left any information. 10,000 is done, returns are done. At the end of the year, the stock at hand were okay. So now they are talking about closing stock. You will write here by closing stock. How much is the closing stock? RM, WIP, finished goods. 35,000, 10,000 and 55,000. Okay, so the total is 5, 6, 7, 8, 9, 1 lakh. 1 lakh is your total. Now again the same thing, do the total of both the sides. Total of both the sides is 3 lakh 47, 1 lakh again it is 4 lakh 47. This side total is 4 lakh 47. Just do not write it inside the trading account, okay, because we do not know which side has the higher total. Now here 5, 10, 15, 1, 2, 2 plus 4, 6, 6 and 6, 12, 12, 7, 19, 19 and then 1, 20, 0, 2, 3, 4 lakh. 4 lakh 5,000, here it is 4 lakh 47, so you can say the profit is 42,000. That is your gross profit. 2 gross profit, that is your balancing figure, and you will write the total on both the sides 4 lakh 47. 4 lakh 47,000, 4 lakh 47,000. Easy? Very easy. Say very easy. Yeah, very good. Now, after this, we have third capsule C. The more capsules we solve, no, the more clarity we will get with the final accounts. Okay. Now, if you are just watching this video on your bed or just you are sleeping and you have switched on the video, it is of no use. You can close the video right now. If you are not solving the questions with me, it has no purpose. The main problem with accountancy and mathematics is that we think that reading accounts or reading mathematics we will understand everything. It is never gonna happen. So please do yourself a favor, close the video if you are not solving the sums. Okay. Now, prepare a trading account with the information given below for the year 31st March 23. First is adjusted purchases. Oh my God. Adjusted purchases means what? Adjusted purchases means opening stock is covered plus purchases is covered minus closing stock. These three we have already added and subtracted and we have got this figure of adjusted purchase 11 lakh. So you will write here 2 adjusted purchase. How much? 11 lakh. Sir, why is it so important? It is so important because if now in question you get opening stock or purchase or closing stock, ignore all three of them. Okay. Now after that we have sales is here. So you will write here by sales. How much? 12 lakh 50,000. Then carriage inward, freight inward 6,000. 6,000 to freight and carriage inwards. Freight and carriage outwards, where will it come? Debit side or credit side? Which side? It will not come only in trading account, remember, because it is outwards and you have to ignore it. Okay. Now, after this closing stock, sir, you write closing stock in trading account credit side. Okay. So I am writing closing stock. As soon as I write this, no, a student tells me, sir, मैंने कहा हाँ, सर क्लोजिंग स्टॉक नहीं लिखना. क्यों? क्योंकि सर एडजस्टेड परचेज में क्लोजिंग स्टॉक वी हैव ऑलरेडी रिमूव्ड, सो यू विल इग्नोर क्लोजिंग स्टॉक. Understood? Now ignore closing stock also. After that, wages you have to write. How much are the wages? 14,000. So you will write here 2 wages, 14,000. Very, very good. Now sales return is not there, so you can write directly this figure outside also. Okay, in 12,50,000. Now the total here is, this side total is 12,50,000. This side total is 11,20,000. So this is 11,20,000. So you will get here 2 gross profit. What will be your gross profit? Your balancing figure. The total here is 1250. 1250 minus 11,20,000. How much will you get? Calculate yourself. I will not tell. Sir, tell. No, I will not tell. You are not solving only. Sir, please, sir. Okay. 1,30,000. This is your gross profit here. Understood? Now. So you will write the total here also. Do not forget to write total. Okay. 12,50,000. Okay. Now. Calculate cost of goods sold. Oh my God. See. Cost of goods sold. What was the formula? Cost of goods sold formula is opening stock plus purchases. See, whenever we are talking about purchases, anywhere in entire accountancy, okay, whenever they are saying add purchases, purchases itself means you have to remove purchase return, whether it is mentioned or not in the question, okay. Purchases means net purchase only. Purchases minus closing stock, add direct expenses. What are the two direct expenses? Wages and carriage inwards, or you can also say freight inwards, okay. Now check. Where is my opening stock? This is my opening inventory 16,000. Plus where is my purchases? Net purchase is given 72,000. But return outward is also given. See, I have to write here net purchase only. Net purchase means what? Purchases less purchase return. Purchases less purchase return means net purchase is only. If net purchase is already given directly, so you can directly write here plus 72,000. See, the question wants you to get confused. Why? Net purchase also given, return outward is also given, but return outward is of no use for us because they have given net purchase. Sir, if they would have given only purchases 72,000, very good. If they have given purchases 72,000, then this return outwards you have to remove from that 72,000. Understood? Now plus 72, closing inventory is 28,000. Then plus direct expense. Direct expense is given 18,600 plus 18,600. This is your COGS. Now, as soon as I write this, no, student tells me, sir, but there is so much data given in the question. Let's read that. First is indirect expenses. I have already told you, trading account will record only direct expenses. What is direct expense? Which is directly related to trading of goods, directly related to buying and selling of goods. So indirect expenses are not included. Return inwards. Return inwards means sales return. Can you see sales return in our COGS formula? No. So do not use that. Will sales be used? Obviously not, because we have to record, we have to calculate cost of goods sold. They are not used. Opening inventory we have taken. Direct expense we have taken. Net purchase is given. That is also okay. Return outwards not required, because return outwards are required if we had purchases, but net purchase we have directly, so not required. Closing inventory we have used. So out of 8 things they have given, 4 are useless for us. That is the problem, okay. That is the twist in these kind of questions. We must remember what information we require to calculate our answer. Understood? So our final answer will be 16 and 70. It will become 88. 88 minus 28 is 60 plus 18, 78,600 is your COGS. The cost of goods I have sold. Sir, is it the price of goods we have sold? No. This was the cost. What does it mean? When I purchased the goods, the cost, what I have paid is 76,600. If I would have sold, I might have sold this for 90,000, or I might have sold it for 1 lakh, 1 lakh. Sir, what is the price we have actually sold? Can we know? Obviously, see, it is given in the question. We sold it for 1,20,000. Understood? That is our selling price of the goods. Or you can say from our this question that the cost of goods sold was 78,600 and we have sold these goods at what price? At 1,20,000. Some return came of 12,000, that is another issue, but we have sold the goods were 78 at 1,20,000. Understood? Now, moving further. The next thing we have to learn is profit and loss account. See, in final accounts we have two things we already read, income statement and balance sheet. Income statement includes two things, trading account and profit and loss account. Okay. It is prepared to ascertain net profit which is further transferred to the owner's capital. It records indirect income and expenses for a particular accounting year. From where profit and loss account starts, see, we already know where a trading account ends, it ends on the gross profit, gross loss. That is what we are discussing here. The profit and loss account is just the next step of our trading account. It means the gross profit we got in trading, that we will transfer here in profit and loss account. Sir, why are we transferring? See, other than our factory expenses, there will be so many expenses. Say I have an office in Bombay, okay, and I have factories in Delhi, Ranchi, Kanpur, Tamil Nadu, Chennai, or so many places. Okay. Now, from all the factories, first I will calculate my gross profit. Then I will bring entire data into my office in Bombay, and then I will calculate the profit. So all the profit is the gross profit. Now think, I have to pay money to my staff in Bombay also, in Bombay office, the employees I have to pay. I have to pay administration charges also, means the supervisors, the people working in my office who are taking care of all the factories, okay, and the marketing manager, the sales manager, the sales team, the marketing team, the people who are the inside auditors of the company. So those all expenses are indirect expenses. They are indirectly related to the business. Obviously, these expenses are not directly related to my factory work. They are indirectly related. So all the office expenses will be coming in the profit and loss account. Now, in profit and loss account, we will transfer that gross profit from all the factory to calculate the final net profit of the entire company. Okay, because company includes office in Bombay and all the factories. Now, gross profit, you can see that in trading account we write here 2 gross profit. Now that gross profit is now transferred here in the credit side of profit and loss account. Okay. So you can write here by gross profit. Now very easy. You will write profit and loss account for the year ended. The date will appear here 31st March 23. And if the name of the company is given, you can write here for Arts Limited. Simple. Now, if gross loss is there, it will be written here. If gross profit is there, you will write here the gross profit. All the expenses and losses will appear in the debit side, because again remember, we have to transfer everything. We have already written entry of salary payment. So we would have written salary debit to cash. Now what we are writing? P&L account debit to salary. Sir, why are we transferring everything to profit and loss account? We have already discussed. We are transferring everything in the profit and loss account to find out the net profit. See, salary to cash we have already written. Now in final accounts we are writing PL to salary. See, profit and loss account debit to salaries. This is how journal entry is posted into the ledger. Understood? So we will talk about the expenses. Salaries of our employees, you know, office rent, stationery, postage, telephone, insurance expense, business promotion, repair, depreciation, interest, conveyance. Conveyance is transport only, bank charges, general expense, whatever expense, losses. See, I have just given an exclusive list, okay. It includes almost all the expenses. Electricity, loss by fire, abnormal loss, commission, advertisement expense, freight, discount allowed. Discount allowed is what discount we have given. Traveling expense, bad debt, provision, and then finally you will get your net profit. Then here you will write the incomes in the credit side, rent income, discount we have received, commission earned, interest earned, bad debt recovered, income from investment, miscellaneous income, and here might come net loss. See, either you will get net loss or you will get net profit. One of the two you will get. Simple. Now, after this, this is the income side, this is the expense side. Okay. So the data will be given in the question. You just have to put the data, find out the profit. Now, after this is our profit and loss account. After trading and profit and loss, what you will get? Balance sheet. Now, if you have already seen our basics fundamentals video, we have already read that there are only 4 pillars. What are the 4 pillars? Asset, liability, incomes and expenses. For income and expenses, we are preparing trading and P&L account. For asset and liability, we will be preparing balance sheet. In that video also, in fundamentals also, I have already discussed this. all the 4 pillars, and I have already told, if you understood these 4 pillars, no, entire accountancy becomes easy. But understanding this will take a lot of effort and lot of time and lot of solving these capsules. Okay, now what is balance sheet? Remember one thing, balance sheet is a statement and not an account. Trading is account, profit and loss is also account. Balance sheet is not an account. Okay, do not write debit and credit here. Balance sheet is a statement showing firm's asset and liabilities and capital of the proprietor at a specific point of time. Understand this. These are the minute details we should focus as the student of accountancy. When we prepare trading account, what do we write? Trading account for the year ending. When we prepare P&L account, what do we write? Profit and loss account for the year ending. But when we prepare balance sheet, what do we write? Balance sheet as on 31st March. Understand this. Why? Because if suppose this is our year, from 1st April 2022 till 31st March 2023, this is our entire year. We are preparing trading account for the entire year. Why? We will record the purchase of entire year, sale of entire year. We prepare profit and loss account to write expenses of the entire year, income of the entire year. But that we calculate their financial performance in trading and P&L. We prepare balance sheet as on 31st March only. That on 31st March, what is the position of my business? That's why balance sheet helps us to calculate financial position of the business, and trading and P&L help us to calculate financial performance of the business. Understood? That's why in balance sheet we write balance sheet of arts as at 31st March 2023. Understood? These are very minute details. Okay. Now after this, check the format. Balance sheet as at, it is given here liabilities and assets. Liabilities, see, owner's capital also appear in the liability side. Why? Because think from the viewpoint of business owner. Okay, business entity. Business entity is thinking that owner has given me funds to run the business. So according to me, it will appear in the liability side only, because I am also liable to earn some profit and give it back to my owner. Understood? So capital will come here. In capital, business entity will give some interest to the owner, interest on capital, profit, if he has withdrawn some money, income tax, interest on drawing and net loss. These all things we have already discussed in our journal and ledger. I am not discussing again. Then in liability side, reserves are appearing. Reserve is nothing but owner's capital only, because whatever reserves are there, that are related to owner only. Then loans is a liability. Bills payable, bank OD, sundry creditors. This everything we have already discussed in detail in our fundamentals of accountancy series. Okay, that is our series number 1. Assets are goodwill, plant machinery, land, patent, furniture, investment, loans and advance, bills receivable, debtors, closing stock, loose tools, cash at bank, in hand, bank balance. So these are the list of assets. This is the format of balance sheet. These all items you are already aware if you have seen my series number 1. If you have not seen that, please read that. Please read fundamentals properly. Only then this video will become important for you. Okay. Now after this, we have your first capsule to prepare the final accounts from the following trial balance of Deepesh Limited. Okay. Now check. Trial balance is already given. I have already told you, without trial balance you cannot prepare the final accounts. Now they have given us trial balance as on 31st March 2023. Check. Check. First item is capital. Where will capital go? Balance sheet. Opening stock, trading account. Cash at bank, balance sheet. Cash at hand, balance sheet. Machinery, balance sheet. Asset, furniture, balance sheet, asset. Purchases, trading account. Wages, trading account. Carriage and work, trading account. Salaries, P&L. Discount allowed, P&L. Discount received, P&L. See, discount allowed is expense. Received is income. Advertising, if it is nothing given, so it is our expense only. Okay. Again P&L. Office expense, P&L. Sales, P&L. No sir, trading account. Okay. Sundry debtors is balance sheet or trading? Balance sheet. Sundry creditors, balance sheet. Very good. You are getting smarter. Value of closing stock as on 31st March 2023 was rupees 50,000. Net realizable value is 51,500. See, This is the trial balance already given. I will tell you one thing. Whatever is given inside the trial balance, it will always appear only at one place only, either in trading P&L account or in the balance sheet. Okay. Whatever information given outside the trial balance, no, it will appear always at two places, trading and balance sheet or P&L and balance sheet. Okay. Always remember this. Now, value of closing stock. Tell me, where will closing stock appear? Sir, trading account credit side we have to write by closing stock. That we know. Very good. And the closing stock means the stock which is there in your warehouse or your factory or your office as on 31st March. So that is your inventory, and inventory also appears in assets in balance sheet. Understood? Please do not forget, this is the silliest mistake we do in the final accounts. Okay. Value of closing stock, but sir, here two amounts are given. One is 50,000, another is 51,500. Which one we have to follow? We already know that value of closing stock should be valued at which value? Lower of cost or net realizable value, whichever is lower. Remember this, okay? So lower is 50,000 or 51,500? It is 50,000. So you will write 50,000 in your trading, 50,000 in your balance sheet. Very simple. So you can say this amount for 51,500 is of no use for us. Understood? Now, how will we prepare? Check. Just go line by line. You can go with capital and all, or what you can do, you can first make trading account also. Just check the trading amounts. Okay. First trading is how much opening stock. So go in opening stock, write to opening stock. How much? 30,000. After that, what is the next item in trading? Purchases 2 lakh, wages 50,000. Purchases 2 lakh, wages 50,000. Sorry, wages 50,000. Then after wages, carriage inward 33 and sales 5 lakh. Carriage inward, see, I am just ticking it so it will confuse us. Carriage inward 33 and sales 5 lakh. Carriage inwards 33,000 and sales is by sales 5 lakhs. How much is closing stock? 50,000 by closing stock 50,000. Simple. Purchase return is not there, so I can directly write 2 lakh in outside column. So the total we have is 5 lakh 50,000. Here 2 lakh 250, 310, 313. So we have gross profit as 2 lakh 37,000. The total will be 5 lakh 50,000. You can write a 2 gross profit. That is nothing but our balancing figure. Simple. Now, what will we do after this? We will prepare profit and loss account. But the first thing is transfer gross profit by gross profit. How much? 2 lakh 37,000. Very, very good. Now check the P&L items. See, we have 5 P&L items here. Look. Salaries is there. After salaries, what is there? Discount allowed, then advertising, then office. Okay. So you will write here 2 salaries 70,000, 2 discount allowed 4,000, 2 advertising 50,000. I hope you would have already taken the printout. 2 office expense 40,000. Simple. After that, what was the fourth item we have? Discount received, that is our income 5,000. So we will write here income will come here by discount received. How much? 5,000. So the total of this side will be 2,42,000. And the total of this is 70, 50, 120, 164. This is 164. This is 242. So 2,42,000 minus 164, that will give you 78,000. That is nothing but your net profit. Because P&L gives me net profit or net loss, that is 78,000. Simple. Now you can write here the total 2,42,000. This is your total, okay. Do not forget to write the total, okay. Please do not play with the format. This is your total, this is your net profit. Sir, gross profit was transferred from trading to P&L, correct. Where will we transfer net profit? Net profit will go in the balance sheet in owner's capital. See, will we prepare now balance sheet? Check what was the first amount. 1,50,000 in capital. 1,50,000 in capital we will write. Just go there, write owners capital, opening balance. Opening balance was how much? 1,50,000. Add net profit. How much was the net profit? 78,000. Very good. So outside you will write 2,28,000. Simple. Then see, trading gave gross profit, then in P&L we found net profit, and then we transferred net profit in our balance sheet. Now what are the other items in balance sheet? Check. We have here cash at bank, cash at hand, furniture, machine, then sundry debtors and sundry creditors. So cash at hand, bank, machine, furniture, these all are assets. Debtor is also asset. Sundry creditor is your liability. So sundry creditors we will write in the liability side first. Sundry creditors 40,000. So your total will become 2,68,000. Sir, every time you never used to write the total like directly in this column. See, in balance sheet you can write, because sides, there are two sides, liability and asset. If your total is not matching, it means your answer is definitely wrong. So if the total here is 2,68,000, you should be sure that the total of the asset should also appear 2,68,000 only. If the total is not here same, it means your answer is definitely wrong. So what are your assets? Check. Cash in hand, cash at bank, sundry debtors, and closing stock. Do not forget to write the closing stock, okay. After this, what were the fixed assets? We had furniture and machinery. Write all the amounts. Cash in hand was 5,000. In bank it was 10,000. Debtors were 90,000. Closing stock was 50,000. Furniture is 13,000. Machinery is 1 lakh. Sir, is there any compulsion on how to write the fixed asset first or current asset first, or we have to write big asset first or then the current asset, these of smaller amount? See, there is no mandatory any format like that. You can write asset in any order, but it will look good if you will write first fixed asset and then current asset, or you can write first current assets then fixed asset, okay. It just appears good. Now the details, balance sheet as on 31st March 2023. You can write here Arts Limited, or in the question they have given Dipesh Limited, so you can write Dipesh Limited also. These things will get you more marks, okay. Or you can say, if the checker finds any mistake, he can still ignore if the presentation is that good. So please focus on these things, okay. This is your total 2,68,000. Next we will solve capsule number 2, that is prepare final accounts for Mohit Limited for the year ended on 31st March 2022. Check. Remember this, we have adjustments also here, and adjustments whatever are there outside the trial balance, they will appear at two places. Trading or trading and P&L account, in one they will appear, and in balance sheet for sure, okay. And whatever is given already inside the trial balance, that will appear only at one place. Now you will tell me the answer, okay. Capital, where will capital appear? I am asking you only, where will capital appear? balance sheet. Opening stock, trading account. Cash in hand, balance sheet. Building, balance sheet. Purchases, trading. Wages, wages also trading. Salary, P&L. Insurance, P&L. Taxes, P&L. If they are saying income tax, then it will go in the balance sheet. Okay, we will remove it from our owner's capital. Then sales, again trading. Sundry debtors, balance sheet. Sundry creditors, balance sheet. Simple. What are the adjustments? Please focus. Adjustments are very, very important. Okay. Adjustment number 1 says, just a second. Now, understand, whenever there are adjustments given, right, first we will solve the adjustments. Okay. What is the first adjustment? Stock on 31st March was 15,000. It means this is the closing stock. Where will it appear? It will appear in the trading account and balance sheet. Okay. Trading account credit side, balance sheet in asset side. Insurance was prepaid to the extent of 400 rupees. Now understand. Insurance expense was how much? 4,000. They are saying insurance was prepaid to the extent of 400. It means what? The question is telling you that what 4,000 rupees you have paid as insurance expense. No, out of that 400 rupees is prepaid expense. It means this expense is related to the next year. But when we prepare profit and loss, what do we write? Profit and loss account for the current year. Now if I am telling you that insurance expense we have paid is 4,000 rupees, and out of that we have paid 400 rupees for the next year. So you will say, sir, it means for the current year we have paid only 3,600. Understood? We have paid insurance premium 4,000, but they are saying 400 is related to the next year. So for current year, how much we have paid? We have paid only 3,600. So now focus with me. This 400 is the prepaid expense, the prepaid insurance. It means prepaid insurance of 400 will go in the asset side, and 3,600 is our original insurance expense that will go in our profit and loss account. So I am writing here that prepaid insurance of 400 rupees will go in balance sheet, and insurance expense of 3,600 will go in P&L account. I have told you every time adjustment will appear in the two accounts, or trading or P&L, and in balance sheet. Okay. Now after this, outstanding salary of 2,000. How much is salary is there? Check. Sir, salary was 70,000. It means, see, they are saying salary expense is 70,000. In adjustment, they are saying outstanding salary is 2,000. What do we mean by outstanding salary? See, I am telling you all these things also we have already discussed in the last part of series 2 journal and ledger. I am just doing a recap for you. Okay. Salary we paid is 70,000. Outstanding is 2,000. You can understand this, that total salary what we are supposed to pay was 72,000 rupees. Okay. How much we have paid? 70,000. But my original salary expense is 72,000. But I have not yet paid the 2,000 rupees. So you can say, sir, it means we still are supposed to pay 2,000. Very good. If I am still supposed to pay 2,000 salary to my employee, it is liability for me. Correct. And my original salary expense, which will go in my profit and loss account, that will be not 70,000. The total will be 72,000. Always remember one thing. How much we have paid or how much we have received is not mandatory that the same amount is our income or expense. How? See, I have paid salary of 70,000, but my salary expense is 72,000. That is why accountancy says that we follow accrual method. How much was the original expense, that you will write in the P&L account. How much you have paid, it is not necessary. Understood? So you will write salary of 72,000 in your P&L account, and in your balance sheet you will write outstanding salary 2,000 rupees in your balance sheet liability side. Understood? The entry what will be passed? See, you will pass your entry. For prepaid insurance you will pass the entry prepaid insurance debit to insurance expense. Outstanding salary is your liability. So your entry will be salary account debit to outstanding salary. See, they have not asked us these entries, but I am just telling you to understand how the accountancy, how the accounts flows. Okay. Then outstanding taxes 1300. Taxes were how much? 50,000. Again the same thing. So tax expense totally will be 51,300 in P&L. Outstanding taxes will be our liability, that is 1,300 in our balance sheet. Depreciate building at 2% per annum. Where is the building? Building is here 1 lakh. So in building depreciation will be charged. So depreciation of 2%, 2 by 100 of 1 lakh. That is nothing but how much? 2,000. This depreciation will go in P&L. But sir, this is our expense will go in P&L. Okay, where will it go in the balance sheet? In balance sheet, when you will write building of 1 lakh, you have to remove 2,000 from the value of building, because the value of building is reduced by 2,000. In building, value will appear at 98,000 in your balance sheet. Okay. Now when we will write, we will start from adjustment number 1 was closing stock. You can start from anywhere, but it is just that you have to remember whatever adjustment was there. Okay. First item is capital, or you can just say we will focus from trading account. Trading account first item is opening stock. Was there any adjustment related to opening stock? Nothing. So directly write to opening stock 21,000. To opening stock 21,000. Okay. Then after that, this is done. Then purchases was 2 lakh, wages are 50,000. Purchases 2 lakh, wages 50,000. After that, sales was 4 lakh rupees. Okay. By sales 4 lakh. There will be some closing stock also. By closing stock. How much was the closing stock? Closing stock was 15,000. Now closing stock was 15,000 in trading and balance sheet. So you will write at both the places. Closing stock 15,000. Okay. And this I will copy from here in the balance sheet also. See, this is the shortcut you cannot use. You have to write only. Okay. Closing stock is, or you can just write here closing stock 15,000. Simple. Do not forget to write closing stock. This is the silliest mistake we do. Okay, we forget to write closing stock. Or you can directly write stock also. Just you can write inventory also. That is of no use. That is not important. But remember, whatever name is given in the question, if they are saying stock, so write stock. If they are saying inventory, then write inventory. Just remember that. Okay. After that, we will prepare profit and loss. Before that, we will find out the gross profit. Total is here 4,15,000. So here also it should be 4,15,000 only. 2 lakh, 250, 260. So total is 261 minus 261,000. It will give you 39, 115, 154. So 2 gross profit 1,54,000. This is nothing but your balancing figure. Simple. Where will we transfer this? You already know, in profit and loss account to calculate net profit. By gross profit. How much is the gross profit? 1,54,000. After this, what is the P&L item? Salary, insurance, taxes. These are the 3 items. See, And for all these three, we have adjustment. Check. Salary is 70,000. Go in that salary one. We have to write. See, the main benefit what we get before while solving the adjustment is, now I directly know that I have to write salary 72,000 in P&L and balance sheet outstanding salary 2,000. Now we don't have to again calculate and use our brain and all, nothing. Just write the figures because we have already done this adjustment. Okay. Salary 72,000 in P&L to salary 72,000 salary expense account and outstanding salary is 2,000. Outstanding salary 2,000. Sir, why have you left so many lines to write owner's capital and all those things? Sir, is it mandatory to write owner's capital in the first line also? It is not mandatory. It is just that it looks good. Okay, that first capital and then liability. Okay, then salary is done. After that, insurance expense. How much is insurance expense? Prepaid insurance 400 balance sheet. Prepaid insurance is our asset 400, expenses 3,600. 3,600 to insurance expense and prepaid insurance how much? 400. Now after that, taxes, this is done. Taxes we are doing 50,000 was there, but you have to write 51,300 in P&L and 1,300 in balance sheet liability. Taxes 51,300, then outstanding taxes are 1,300. Okay, after that, insurance done, salary done, taxes done. Now no item is there for P&L. Sir, we have depreciation, no? Yeah, correct. So depreciation is 2,000 rupees and building, from building we will remove that. So to depreciation 2,000. Please write all the adjustment as your working note. Okay. Now depreciation is 2,000 and then I will write here building. How much will appear at building? 1 lakh minus 2,000, that is 98,000. Okay. We have already discussed depreciation in detail in our 2 videos in the depreciation. Okay. There is already a series on depreciation. Please go and check. Now after this, we can calculate the net profit. To net profit, total is 1,54,000. 6, 7, 8, 9, 900. 2, 3, 3, 3, 6, 7, 8. 5 and 7 are 12. So 1,28,900. This is 1,54,000. So how much will come? 24, 25, 100 is your profit. 25, 100. This will be 1,54,000. Total will be 154. Understood? This is nothing but our balancing figure. Now you tell me where will our net profit will go? Sir, owner's capital. Very good. How much is owner's capital? Check. Balance sheet 1,50,000 in owner's capital. Okay. This is balance sheet item and then debtors and creditors. I am writing here debtors, creditors, then your owner's capital 1,50,000, add net profit 25,100, it will be 1,75,100. Understood? Now do the total. The total will be 1 plus 3, 400 here. Then 2,000, 3,000, 3 and 5, 8, then 7 plus 4, 11, 1 there, 2,18,400, here also 400 as it is, then 5, 8, 9, 10, 11, 12, 10, 5 will be 13, Are we forgetting something? 2000. Yeah, we have to write, I think, some item from balance sheet. Yeah, we have to write cash at hand, no? This thing, 5,000 rupees. वही तो सोच रहा था. Cash at hand. Cash at hand. See, the best part in final accounts is if your answer you are not getting tallied, no balance sheet, if it is not telling, you will know that there is some mistake. This is the best part, okay, in accountancy. 5,000. Now, the total here is 98, this 15, 400, 5,000. This is coming at 2,08,400. OMG, we have total here 2,18,400. It means definitely there is some mistake what we have done, okay, for the 10,000 rupees. We'll just check it. The trading account C. The problem is that mistake can be here also and here also. So now when we obviously know that here it is 10,000 rupees extra, if you are sure about that, okay, your asset side is correct, then you have to focus here, because these three are very less amounts, okay, and just we had to copy it from the question itself. So there would be definitely some problem with the net profit. Now let's go there. Net profit will appear from gross profit only. So sales is given, closing stock. I guess there is some mistake here only. Gross profit will be, just calculate this, 4 lakh 50 into 2 lakh 21 and 50. This will be 1 lakh 44,000. Okay. Now here also gross profit will be 1 lakh 44. Because it has been reduced by 10,000. So your net profit will also reduce by 10,000. It will become 15,100. And then net profit here will be reduced by 1, again 10,000, it will be 15,100, and here it will be 2,08,400. Understood? The difference of 10,000 made our entire balance sheet wrong, and this one mistake, the problem with the final accounts is, if your gross profit is wrong, net profit will be wrong. If your net profit is wrong, again balance sheet will be wrong. See, now it was easy because we knew that the answer was this much. Just to tell you that how the answer can become wrong and how to correct that answer, this has been done, okay. Please remember this. Net profit is the first thing that you have to check whenever you are getting the wrong totals. Understood? Please solve all these questions. Thank you so much.